Welcome to a new episode, guys. In this video we're gonna do a trade breakdown. I'm gonna show you the exact strategy that I used to enter this trade right here, how I managed the trade, why I put my stop loss here, and why I took this long. Alright, so stick to the end of this video, grab a pen or paper and focus. And here's the trade I took. This is from my funded account on my funded FX. You can see that I entered here and exited here. Now let's just get started. So first of all, the strategy I used here is the one that I shared many times on my channel. So if you didn't watch my videos yet, go watch them. We have this video right here, and I outlined exactly how to use this strategy on forex pairs and indices and crypto also. So it's so easy and you can implement it in just 5 minutes of time. All right, so watch this video first or just follow along with me, because it's not that hard to mimic or apply. So first of all, the strategy is like this. It goes like this. We want to see first a liquidity run. Second, we want to see a higher time frame PDRA rejection, meaning fair value gap breaker, an order block, anything. Next, you want to see a lower time frame market structure shift, and we want to enter entry on a breaker, all right, or a fair value gap. That's it, easy. And of course we have the time. So for forex pairs, time window is 2 a.m. to 5 a.m., which is the London killzone. So let's just put this aside and try to apply this on here. Now, as you can see, first of all, you can see that price took liquidity from here. Let's go again to the 15-minute. So we are on the time window. The time window, so it is 2 a.m. All right. Price took liquidity from here. So the first condition is checked. Price taking liquidity. Liquidity is this swing right here, or this trend line, because trend lines, retail traders will see them as an opportunity to buy here. So below them, it's only logical to find sell stops, sell side liquidity. All right, so we have taken liquidity. The first condition is checked. Next thing, you want to use a higher time frame PDRA. So after taking liquidity, you want to see if there is a higher time frame PDRA below that liquidity. And you can see we have a nice we have an order block right here, plus we have this fair value gap. This is an obvious one. Go for the obvious one. All right, do not try to force a PDRA. If the PDRA is not there, then do not take the trade. All right, I tried so many times to force a PDRA and that went horrible. So the obvious is better. So the second condition is checked. Let's go again to the lower time frames. We have liquidity rate. Next thing, higher time frame PDRA. Then the third thing is you want to see a market structure shift on the lower time frames, and you can see here, first of all, we have this market structure shift right here, and I couldn't actually take this trade because I wasn't in front of the computer, so I waited. Then we have this market structure shift right here. All right, taking this swing and this swing. Next thing, you want to enter on a breaker or a fair value gap. There is no breaker right here, so I entered on this fair value gap. And now I'm going to show you something on why I took this, why I put my stop loss right here on the lower side of the body of this candle. Now we can see that we are shifting from sell program to a buy program. Now on a buy program, red candles like here and here should hold the price. All right, it should hold the price so it can go higher. This one is an order block, and this one should hold the price. That's why I put this stop loss right here. Now you can argue that why didn't put your stop loss right here? All right, I remember one thing ICT said one time. It said when 3 PD arrays are raided, so when 3 PD arrays get violated on a buy program or a sell program, then the market will likely to shift. You can see we have this fair value gap right here. So this is the first PD array. The second PD array is this red candle right here. This is the second PD array. The third candle right here, this is the third PD array. Now for market to shift, it needs to go to violate this fair value gap, this red candle, and this red candle. And as you can see, that's why I put my stop loss on this third PD array right here. And you can see that price hit it to the tick and continue higher. This is something is not common. Few people know about this, so focus on this one. If you have to repeat this segment of the video, repeat it and write it on a note. When 3 PD arrays get violated, then on a buy program or a sell program, then we might shift structure. Now my TP was 2.5 above this this swing right here. Nothing fancy. Now let's talk about draw on liquidity. Why did I choose this swing as a draw on liquidity? Why did I favored the long side over the sell side right here, over the short side right here? I tell you what. So the market, as I mentioned something on my video right here. Watch this video right here. This will give you narrative and bias and the direction of the market. So the market will do simply two things. It will only do two things. It will either seek for sell side. It will either seek for liquidity, or it will balance an imbalance. That's the only thing. As you can see here, the market from here, the price took liquidity from this trend line and this swing right here, plus it hits a fair value gap. So on the sell side, price already did these things. It already took liquidity, plus it hits a fair value gap. So what is left, guys? The buy side. Now it will target the buy side. And what do we have on the buy side? You can see that this failure swings right here. We have this failure swing. This swing couldn't violate this swing right here. This swing also, this swing also, this swing also. Now this is liquidity. You might see it as the market is unwilling to go higher, but that is the opposite, guys. That is engineered liquidity. You can see that this is liquidity from here. The retail traders will see this as the market is trending lower. You see, like lower, higher high. Higher high, lower high here, lower high here, and lower high here. So this is liquidity. That's why I choose this, the buy side, as the next target. Now you can see that I wrote here the draw on liquidity. So I want the price to go here, but that doesn't mean I need to hold price all the way to here. I don't need to hold my trade all the way to here. Why? Because this draw on liquidity will only give me direction. It will give me that, all right, you only need to take longs from now. Do not take shorts. But that doesn't mean I want to hold trade from here. That's actually a matter of preference. If you want to hold trades, then do what suits you well. Now I believe we came to an end of this video. You can see that four steps of this strategy can make you a living. Only this. Now, I don't want you to watch this video, see this trading plan here and go live and trade it. No, go back test it, go demo trade it, and then decide whether it works for you or not. So if you have any questions, please give me a follow on Twitter and DM me, and I'll answer you, or leave a comment down below and I'll reply to you as soon as I can. Happy trading and good luck.